Welcome to Inside India. I'm JP Ong, and here are your headlines. India and the European Union are closing in on a long-awaited free trade deal, including a big cut on tariffs on European cars. We will discuss this so-called mother of all deals later this hour. U.S. Treasury Secretary Scott Bessent suggests tariffs on India could be halved as New Delhi reduces its reliance on Russian energy. And gold continues to shine, the metal surging past $5,000 a troy ounce for the first time. Buying in India is also soaring on worries of a hike in gold import duties in this weekend's budget. Good morning and happy Monday. As always, we start off the new trading week with a check on how Asian markets are doing. And the Monday morning session has not been kind to many of the major equity indices so far today. We are seeing the Nikkei 225 today falling by 1.9% on the back of a stronger yen that is finding strength on belief that there might be some intervention to try and make sure that its recent weakness can be curbed. The South Korean Kospi also trading about 0.5% in the red. But we are seeing some gains from certain markets like the Taiwanese TAIEX and the Shanghai Composite. Not the same for the Hang Seng today. In Hong Kong, we're seeing the equity benchmark there trading about 0.5% in the red. Keep in mind, markets down under are closed for Australia Day. Indian markets will also be closed today for the country's 77th Republic Day. The currency, though, is trading and trending downwards and looking a bit firmer, actually, against the greenback. Now at 91.53 against U.S. dollar. It's about 0.1% stronger, actually, intraday. And so far, just holding on as equity markets remain offline in lieu of that holiday. U.S. Treasury Secretary Scott Bessent also signaling a possible rollback of additional tariffs on India after New Delhi sharply cut imports of Russian oil. Trade tensions flared last August when President Donald Trump doubled tariffs on Indian goods to 50%. But recent data shows India's Russian oil imports fell to a 2-year low in the month of December. Speaking at the World Economic Forum, Bessent said the collapse of India's purchases on Russian crude are a mark of the success of Trump's tariffs. He also suggested there may now be a path to removing the extra 25% levy tied to those imports. And more conversations on India's energy ecosystem will be happening in gorgeous Goa this week. That's where Amitabh Singh is. Nope, he is not there for a holiday. Amitabh, tell us what we're looking ahead to out there while you're trying to at least catch some rays out on that coastal town.
Well, thanks so much for that, JP. Yeah, it's great to be out of the studio. I did think that we'll be in a conference room and just focusing on that. We're getting a taste of the beaches. So yeah, there's a lot to cover. It's India Energy Week. It is an exciting time for India because when you look at what's happening globally, the geopolitical order shifting, particularly in light of that conversation that has been started by the Prime Minister of Canada with his speech, what we can say is that because there's this shift now towards middle powers aligning differently, not with the US as much, but with other powers like in India, we're focusing on Energy Week in that context. Remember what's happened out here. We have India Energy Week in the context of a couple of things. You heard what Scott Bessent indicated, that there is a pathway for that 25% penalty on India when you talk about its purchases of Russian oil. That can be dropped. That's what he kind of hinted. And we'll have to see how much Russian oil is actually being bought by India right now. That's one of the questions that we'll be asking some of the leaders, some of the companies that we'll be interviewing during Energy Week. The other context that we're looking at effectively is that you have this idea that India has to switch from being an oil and coal focused country to now becoming a country that has a different energy mix. Can it do that when it aims to be by 2070, 75 net neutral? That transformation is taking time. India needs investments, and there's been a focus around that for quite some time. Is it doing everything that it needs to do as fast as it can possibly do it? That's the question. The other aspect is that when you have this conversation around India's purchases from Russia and its general diversification of energy purchases, it's switching. It's buying from the Middle East. We did have that $3 billion deal that just came in that was announced a couple of days ago between the UAE and India. Surprise deal. The UAE president flying to India. Came out of the blue, really. The other aspect is that Reuters is reporting a couple of different deals. And I just want to bring that to the fore out here. This is interesting because India is now, according to Reuters, going to be buying from, guess where? Brazil. So not from Russia, but Brazil. Diversification on full display here in Goa as India tries to effectively get that 25% hangover of the US removed. What's happening? India's Bharat Petroleum is buying 12 million oil barrels for about 780 million from Brazil's Petrobras. Not just that, Total Energy is coming into the conversation. LNG and sustainable aviation fuel deals with France's Total Energies. Also, NRL and Explorer Oil India signing an LNG deal with Total Energies. Bharat Petrol Resources Limited, a unit of BPCL, reflecting the diversification by signings or set to sign a pact with Shell to buy stakes in oil and gas companies across the world. Now, all of this happening based on Reuters, and there is this other aspect, and something that we didn't spell out as much, because when Scott Bessent said that there is a pathway to that the reduction of the 25% penalty on India for buying Russian oil, he also said something else, that Europe is actually fueling its own war for Russia by buying oil that India buys from Russia, refines it and sends it back to Europe. So that's the question that is very important in the headlines.
Yeah, Mitosh, and of course, when you talk about solving the energy trilemma, making sure you have sustainable, affordable, and reliable energy needs, it takes on a different context when you apply to an economy of the size of India and grows as fast as India does. But this also will be key, actually, in terms of making sure that growth actually is maintained, because while Energy Week happens, it also comes alongside an EU delegation's visit to India, and the expectations are to try and conclude this long-awaited FTA. Give us more details as to whether or not this can actually be achieved based on what you're hearing on the ground.
Yeah, that's the key question, JP. You hit the nail on the head. The question is, why is everyone out here? The optics are set for something big, right? When you have the two leaders, historic in a sense, because you usually have one leader coming to the Republic Day of India, which is happening effectively right now. It's raining in Delhi is what we hear. But when you have that happening, usually you have one leader. This time you have two. The EU's two leaders. Historic shift. And what this reflects is that there is now a focus on strategic autonomy and a shift from, hey, yeah, we like the US. We've been focusing on the US, but let's just shift a little bit to the EU also. Make sure that that partnership is solid. And that's exactly what this reflects. Now, the question is whether this will actually happen. What we know so far is that analysts expect that this will happen. We have also had the EU Trade Commissioner speaking to CNBC TV 18, our India partner, and saying that, yeah, the situation is that we've agreed on about 95 or 98% of all the elements of this trade deal. There will be some disagreements, some red lines, agriculture and dairy, a particular red line for India, environment, a red line for the EU. That aspect may not effectively, be crossed, and that's fine. We're fine with that. What we're going to do is agree on what we already agree on and sign a pact and move forward on that. Now, the hangover here is very simple. When you have Donald Trump, the president of the US, threatening the EU on Greenland, and you have this 50% tariff, the largest on any big economy in the world on India from the US, what did they do? Well, we switch. We decide that we're going to partner with the EU. Additionally, in terms of timeline, you asked this question, when does this really play out? See, when you have a deal that's potentially going to be signed during Energy Week on the first day, it's going to come around 4 p.m. The announcements usually come after the India-EU summit. It's the 16th one. That deal, when it's announced effectively, here's what's going to happen. They're going to have a transmission that takes almost 2 years. You're going to have a deal that's signed, but at the end of the day, there's going to be some legal stuff that needs to be kind of, sorted. You're going to have to make sure that it's legally sound. That takes about 2 months. Additionally, you have 27 countries of the EU. They all have to sign off in their own respective legislatures. And then after that, implementation, transmission. How does that play out in the Indian market when you have Donald Trump already threatening Canada? Hey, if you make a deal with China, we're going to impose bigger tariffs on you. So will there be a switch from the US? Would they increase their tariffs on both EU and India for making this deal? We don't know. Trump is unpredictable. And that's why this Energy Week, this day one, is exciting, because it's not just going to be about energy, not about Russian oil. It's also going to be about this great friendship between the India partners, EU and India, given the fact that this is the biggest marketplace now created in the world. 2 billion people, they'll trade together.
Yeah, and Amitosh, when you talk about Energy Week, you've got the FTA agreement and also the budget coming up. Sounds like you're going to have your hands full over the next couple of days out there, and hopefully you find some downtime, especially taking note of how beautiful that beach is behind you right there. Amitosh Singh in Goa right now, preparing for Energy Week out in India, and we'll continue this conversation now with Vishrut Rana, who is the senior economist at S&P Global Ratings. Vishrut, thank you for joining us today. As we mentioned, very, very busy next couple of days out in in India. But let's start off with this free trade deal that this FTA that India is trying to ink with the EU. We've been talking about this for over a year now, and as Amitabh said, there's still a couple of things to close, but the signing is possible. How crucial is it for both India and the EU to actually get this free trade agreement done, given the circumstances of the global trade order right now?
Yeah, thanks, JP. It's great to be here. Thanks for having me on the program. Indeed, as you point out, the India-EU trade deal is quite important for both these economies. For India, as a bloc, EU is the second largest trading partner overall. So it can substantially move the needle in terms of its external exposure. It is important in the current landscape for economies to diversify their external linkages, and I think that's what both of these large economies are trying to do. Just diversifying trade networks, but also service networks. Both of these for India are quite heavily reliant on the US currently. This deal gives an opportunity to move away from that, expand in EU markets, and really leverage that kind of partnership for external driven growth.
Yeah, one thing Amitabh mentioned a while ago is that just because you signed the deal doesn't mean it's going to kick in right away, because there is the need to get approval from various EU member states. There's also the need to also get legislative a go-ahead, at least with regards to the deal, and then you can implement that, which could be months, if not a year, actually. Again, is time of the essence to getting this implemented and really getting it rolling? And I ask that because it seems that from signing to implementation, you might still need to clear a couple of hurdles that we should be aware of.
No, that's right. I think trade deals typically do, because they're quite complicated, they do typically take some time to come into force. So it is not unusual in that sense. I think having a pathway towards lower tariffs and easier trade, some services aspects and investment aspects also covered in this wide-ranging deal. So having a pathway towards more clear and easier access on those fronts, I think that is quite important. It's going to have a sentiment effect for sure, boosting confidence in both of these economies. For certain easy to implement things like lowering tariffs on certain sectors, that might be the things that happen first. More complicated things like data protection things, etc., it could take some time. But at least there will be some direction, some pathway moving in that towards that easier access, which would be quite important.
So one thing that I also noticed is it's going to be important also for a lot of these Indian exporters that are trying to find new markets for their goods that might have been impacted by the tariffs in the United States. But the question here, I think, is there are some non-tariff barriers, they say it, in the EU, certain restrictions such as certain climate-linked and carbon levy requirements out there. Do you think that's going to be a significant hindrance for some exporters who might struggle to meet higher requirements for clearances and documentation, for instance? What are your thoughts there, Vishal?
Yeah, the EU has various climate-related policies in place, like the carbon border adjustment mechanism, etc., which could be a challenge. India's energy mix still relies heavily on non-renewables, fossil fuels, so there could be that element of boosting the carbon requirement in the production in India. So there could be some challenges on that front. I think this deal does tackle some of the aspects of the environmental regulations, etc. And there has been a push in India to move towards renewables. Something you were discussing with Amitabh earlier, the shift to renewable energy and green energy, which is likely to get some momentum. So that is likely to help over time. Likely there might be some mitigation offered to Indian products over the time being, which can probably take a few years to be unwound. That's probably one possible pathway. But for the time being, it is going to be a bit of a challenge, given that the carbon, usage in India will be a little bit higher.
Yeah, so since you mentioned renewables, I want to shift to that now, because whenever we talk about growth and the path towards sustainable renewable energy, everyone brings up the framework of the energy trilemma. It has to be sustainable, it has to be affordable, and it also has to be reliable, meaning it has to make sure that you don't have outages and you can support growth. This, though, takes on a different other context when you apply to an economy the size of India and an economy that grows as fast as India does. Can you actually make a a strong shift towards sustainable or renewable energies if India's energy needs to grow as fast as the economy does, about 6 to 7% growth. What are your thoughts there, Vishnu, about how challenging that's going to be to maintain the shift to more renewable energy sources when you have an economy of this size growing this fast, especially in the context of India?
Yeah, no, you again, identified the issue quite clearly. It is going to be a significant challenge. Energy needs are growing. It's not also just that the economy is growing fast, it's also growing in the energy intensive space, right? So for every unit of growth, you need more energy than you needed before. So from that sense, there's almost a quadratic increase in energy demand. And that means that traditional fossil fuel energy sources are likely to be a part of India's energy mix in the near future. But I think from a couple of standpoints, there is going to be transition towards renewables. So first of all, given the environmental constraints in India, it makes sense to be eco-friendly and to move towards less environmentally demanding energy sources over time. So there's going to be investment in that front. There is investment in the solar space. Of course, there was recently the passage of the civil liability law for nuclear energy. So that means that there might be more civilian nuclear production. Certainly the targets are quite ambitious in that space. And the second aspect to that story is, and probably more pressing, is energy security. Right? Energy in India is very much imported, very heavily imported, with the exception of coal. So there's likely to be a shift towards domestic energy production, which can be provided by things like nuclear and solar and renewables, which are going to get capex in the future for sure.
So I don't think we talk too much about nuclear energy in the context of India, actually. How serious or how realistic is it for nuclear plants, whether it be traditional or SMREs, to start becoming a bigger part of the energy mix in India, if it isn't already?
Yeah, it's not substantial at the moment. It's still relatively small. Part of the reason has been the regulatory framework, of course, and the dominance of the state-owned enterprises. I think that's likely to change. The targets are quite ambitious in terms of expanding nuclear energy in the energy basket, including through domestic production, through partnerships with international firms, and getting technical expertise for some of these SMR based nuclear energy generation. So certainly the targets are there. I think it is possible, given that there is already an environment in place. In addition, the regulatory environment has become more favorable. In some of these agreements, such as with the UAE, there is an element also of nuclear cooperation in power generation. So we could see some more of that in coming years.
Okay, so energy security, and this is one of the reasons why they say that Russian oil is very important for India, because of the discounts they provide and the affordability and security it provides for India's energy mix. Some economists and some of your peers have actually mentioned before on the show that the discount that Russian oil has versus some of their direct substitutes, like say middle Dubai crude, for instance, isn't as deep as it used to be. And we've also seen signs of India lowering their imports of Russian energy, which the U.S. now says, hey, you know what? If you continue to do that, we could even cut those tariffs by half. How crucial is it going to be for India, or how inevitable might it be, if it is that the case, for India to lower Russian crude? Because not only will that be favorable for the U.S. in terms of a trade deal, but the EU itself might also look at that and go like, hey, you know what? I actually like that. Let's keep talking.
Right. No, that's right. I think in terms of several aspects, that's a positive. In terms of diversifying the energy import sources, it's important, because India had been a large importer for Russian crude in recent years. But that's also changing with time. I think now we're seeing Latin America emerging as a destination or source for oil imports. So it is possible. I think there is oil in the market out there. Indian refiners have shown that versatility to shift to different energy imports and different crude sources. So I think there is definitely incentive from both sides to diversify crude oil imports.
These can all be tackled also, and might also be connected to the other major event that we're tracking in the next 2 weeks, and that is the national budget that's going to be outlaid by India. Vishnu, you've been looking at this a lot longer than I have. What are some of the key things you're watching out for when that budget is unveiled? I believe sometime early next week.
Yeah, that's right. This is an interesting time for the economy, certainly very crucial week. First, we have this free trade agreement, sizable free trade agreement coming in, and then, of course, we have the budget. Right on the back of that, it comes in the context of an economy that is growing strongly, but also facing weaker consumer and foreign investor sentiment. We're seeing weakness in the FX. The budget has an opportunity to change that narrative. Right, and what we're looking out for, one, is continued focus on CapEx and infra. Infrastructure spending in the past has had positive spillovers onto the rest of the economy, so that is going to be an element that is anticipated in the budget, and we're looking out for that. Other measures include ongoing deregulation. There has been some of that in recent years, some rationalization of the GST code. And that's something that we'll watch out for. One thing to note, of course, is the nominal growth that has been slightly weaker over the past year. And that means that revenues, the momentum for fiscal revenue is a little bit lower. So we'll be watching out for that in terms of what are the strategies and expectations on the revenue front.
Yeah, so the thing is, though, we've also noted that one theme everyone's looking out for is the possibility of fiscal consolidation. But with fiscal consolidation, does it then constrain the ability of the budget to support or guide the economy towards these new growth paths at the moment? If you're trying to constrain or consolidate your fiscal space, does that actually constrain also the ability of the budget to actually support growth in India? What are your thoughts?
So as an economist, I definitely think that if a government is spending well, they should spend a lot if there was no resource constraints. But of course, that's not the way it is. There are resource constraints, right? There's a limit to how much the government is spending, even if it is high quality spending. And for India, it is important given that the deficit is quite large, right? On a general government basis that we track at S&P Global Ratings, that number tends to be higher than 7% of GDP in terms of the overall government deficit, right? So that means that consolidation is still important. There's benefits and drawbacks. The drawback, as you mentioned, is that the public sector is less active in promoting growth. But on the plus side, it can help crowd in private capex by lowering the borrowing costs for private firms, crowding in some of that private spending. Private capex has been missing in the Indian growth story for a couple of years.
Creating this room for the private sector to do more.
That's right. So it does do that to some extent, primarily through interest rates, but yes, to get the private sector a little bit more involved in some of these growth pushes. If the government does take a step back. So it could have some positive aspects.
Vishnu, we have 30 seconds. We've talked about the outlook for the Indian economy, the opportunities and threats. What are your expectations now at S&P with regards to growth this year for one of the largest economies in the world now, because we can call India that now, right? So
that's right. Yeah, we expect 6.7% growth, so slightly higher than last year. But growth this year is likely to probably come in slightly more than that. So it's slightly on the flat path. I think the interesting aspect to watch out for will be nominal growth.
Okay, so 6.7%. We'll see if we come close to that mark, and we'll have you back here once we find out if that is achievable. Vishnu Rana from S&P Global Ratings, thank you so much for joining us and helping us tackle this wide swath of economic issues and topics connected to India ahead of their budget as well. Appreciate the time. Well, billionaire Gautam Adani's aerospace and defense arm is reportedly set to announce a tie-up with Brazil's Embraer this week to assemble commercial aircraft in India. This is according to a Reuters source. The partnership will establish a final assembly line for Embraer's regional jets, marking a major win for New Delhi's push to get global plane makers to manufacture locally. India's airlines have more than 1,500 aircraft on order, and Embraer estimates the country will need at least 500 regional jets over the next 2 decades. The announcement is expected at India's Civil Aviation Ministry and is being billed as a historic moment for the sector. Now, coming up, 2025 was all about AI. But what's shaping investments and banking as we move into 2026? Our China Connection anchor Emily Tan speaks with Maggie Ng from HSBC Hong Kong on this and more, live from the ground at Hong Kong's annual Asian Financial Forum. Stay tuned. Welcome back. In Hong Kong's annual Asian Financial Forum kicks off today, bringing together leaders from government, finance, and business communities to discuss key themes such as trade, the global economy, and investment opportunities here in Asia. The China Connection anchor Emily Tan is leading our coverage on the ground. Emily, it seems that Amitarch is not the only anchor that's out on the wild today. Take it away. What are you seeing and what do you have for us out there?
Thanks a lot, JP. And we're here at the Hong Kong Convention Center for the 19th installment of the Asian Financial Forum. And this brings together 3,600 different participants from 60 countries and over 100 business leaders, political leaders, as well as financial experts. And what they're coming together here is they're going to be looking at co-creating new horizons in what is being known as an evolving landscape. That is the theme of this year's AFF. So, we've been talking to various number of guests this morning on CNBC. We got a chance to hear from Goldman Sachs, Kevin Sneeder. He was talking about the house view on China. They're expecting a 4.8% growth this year for the world's second largest economy, also a 20% jump in the Chinese markets. This, as we also got a chance to hear from Jose Manuel Barroso. He is the former head of the European Commission and former Prime Minister of Portugal, as we talked about the EU and how it's dealing with Trump and Greenland, as well as, of course, the EU and an Indian trade deal, which could be announced as soon as tomorrow. So lots going on here. We're talking about geoeconomics, and joining me now is Maggie Ng. She is CEO of HSBC Hong Kong and also AFF 2026 Steering Committee Chairperson. Maggie, thank you very much for having us here and making the time to speak to us. Now, you're new to this role at AFF, and I want to ask you, when you bring business heads and political leaders together here in Hong Kong, what is the message that you're trying to put out?
Thank you very much. First of all, Emily, thank you for covering us today at AFF. We've been a very busy morning for us today. We've received well over 3,600 delegates from all over the world, over 60 markets. This truly speaks to the fact that Hong Kong is the international financial hub. And when we look at the Hong Kong data, we are very positive about the outlook of Hong Kong. Last year, we're looking at Hong Kong's GDP to reach about 3.2% growth. Our property sales has shoot up by almost 19% after a few years of dampen. And retail consumption has gone up. The retail sales has gone up for the first time to about 7%. Stock market has been very vibrant, grew by 28%, and we've attracted more than 100 IPO companies to Hong Kong to list last year, raising more than $37 billion. All of this has gone to show that Hong Kong is at a rebound. So I'm hoping that investors from all over the world coming here can see this in their own eyes.
You bring up the IPOs, and at the top of the leaderboard last year, 114 companies, $37 billion, and a strong start to 2026 with about a dozen companies having already listed as well. My question to you, and I've been asking some other business leads and business heads, is with all this capital market raising activity, can the market digest all of it? Is there the appetite with over 300 companies? They're all lined up to list in the Hong Kong market.
Yeah, I think that Hong Kong has its own attractiveness. We have to look at the company that's coming to Hong Kong. Now, a lot of them are the mainland companies looking to diversify and expand overseas. And when we look at just the fundamentals of these companies and the ability for them to expand, there's truly a lot of values in these companies to come to Hong Kong. In addition to that, it's not only just the capital market that's been very strong. Last year, we saw foot traffic coming to Hong Kong very strong as well. In HSBC last year, for the first 9 months, we've been onboarding about 100,000 new customers per month. To respond to that, we've had open up 3 new wealth centers, 3 new retail centers in Hong Kong. The wealth centers are in IFC, ICC, our main building. But despite we've been expanding, there's still, our wealth center has been fully booked always. Last year, our wealth center on average every day made about 100 client meetings per center. So I think there's just enough traffic, not only just the company coming to IPO, but also a lot of individuals, international individuals coming here to look to diversify their portfolios.
I know your background is in wealth, and George Al-Hadari, Group CEO at HSBC, has said that expanding wealth management business would be the focus for the bank in the coming years. As a wealth expert, what can we expect to see?
I think in Hong Kong, well, firstly, we're very fortunate to have a lot of international fund houses, insurance company based here, and we have a lot to offer to the international clients, be it fixed income products, equity products, as well as our derivative as well. When we are looking at the number of customers that we have onboarded recently and our domestic customer, they're very curious about the wealth products, insurance products, and international payment products. And we're looking at, supporting them to expand to overseas market as well. One thing I would say in the space of wealth is it's not only just the product that makes a difference, it's how we deliver to the product to the customer is going to make a difference. When we look at the mix of our customers, the international customer, they are a lot more digital savvy than our domestic customer. So we've been investing a lot into our mobile capabilities. Just last year, we've rolled out more than 400 new features to our mobile. So that's about more than one feature per day to make sure the journeys are frictionless. And as a result, we've got more than double our mobile active customers just in the last 3 years.
You assumed the role as a CEO of HSBC Hong Kong in October. In the couple of months since then, what have your observations been at the bank, and what are your priorities?
I think the bank, increasingly, I'm seeing customers looking at us as one bank, no matter which market we operate, which line of business. So my focus to the team is we just need to focus on the basic, A, B, C, and 1, 2, 3. That's what matters. A is we have to attract, growth. And B, broaden our capability, in particular digital capability, and C, always put customer first. Think customer, deliver values. And the 1, 2, 3 strategy is we operate as one bank, in front of our clients. And we have two very core businesses in Hong Kong. The retail banking business and the commercial business are the largest business in Hong Kong. And we also have to capture the 3 corridors that are coming to Hong Kong via Hong Kong to international.
Your predecessor, Luann Lim, was reassigned to CEO of Hang Seng Bank. Now, the privatization was just approved by the High Courts on Friday, and it becomes binding today. Now, shares of Hang Seng Bank will be withdrawn from the stock exchange tomorrow after being listed for 53 years. What kind of synergies and cost savings does this bring and create?
Well, firstly, we're very excited about Hong Kong's growth, which is why we're putting money at where we believe. We've been investing. The privatization is about $13.6 billion to be exact. And the investment into privatization is to focus on growth. I mentioned we've been expanding our network presence, and it's still not enough to capture the flow. So by privatizing Hang Seng, we will be able to upgrade our ability to capture the Hong Kong momentum. For the customer of HSBC and Hang Seng, they should expect to see a much broader product suites, and they can access to HSBC's global network more, easily.
Talk to us about the home market advantage. Hong Kong is the home market here. How does that translate into a tangible edge when you want to serve both local Hong Kong clients as well as mainland Chinese customers?
Yeah, I think time to market is of paramount to us. In the past, Hong Kong used to be one of the markets of many global markets. Now we've elevated Hong Kong status to be a home market, which means decision right is much faster. And I just gave you an example. I've opened 6 branches in the last year, which was unheard of in the past. So in order for us to serve our customer just in time, monitoring the market dynamic, having the ability to be a home market and to make decisions on our own is crucial.
As we continue to track the economic rebalancing shift over in China mainland, going from high-speed investment-led growth to one that is driven by services as well as consumption, what is the impact on Hong Kong's business environment?
Right, so this year is going to be China's first implementation of the 15th Five-Year Plan, and there is increasing focus, like you said, on economic stabilities and balancing. What China wants is clear. They want 2 things. One, they want to nurture the new technologies development, renewable energy, AI, semiconductors, so on and so forth. By doing that, it will help to upgrade their own economy and the industrial growth. And at the same time, it wants to nurture and protect the domestic companies and help them expand domestically and internationally. And at the same time also attract international investment into China. So Hong Kong has a very unique role to play here as the gateway for China. So we have a very deep capital market, we have innovative financial and risk management products, and a very sound legal and regulatory framework. All of this will be crucial for international customers wanting to channel into China and domestic customers, company wanting to springboard to international.
Maggie, that was great. Thank you very much for joining us today to speak with us and sharing about the growth and what we can expect from HSBC Hong Kong. Maggie Ng, CEO of HSBC Hong Kong, and we're coming to you from the Asian Financial Forum. And JP, just to tease ahead, we still have coming with us Financial Secretary Paul Chan. He will be joining us in the next hour, along with JP Morgan's APAC CEO, that's Assured Leonard. So two big guests coming up, still to come from the Asian Financial Forum. Back to you in the studio.
Absolutely, Emily. We can't wait to see and to hear you conduct those conversations later. A lot to possibly glean from these next guests. That's Emily Tan from the sidelines of the Asian Financial Forum out in Hong Kong. Still ahead, developments on trade and tariffs. President Trump is threatening new tariffs on Canada if it signs a free trade agreement with China. Our China reporter will get you a closer look at this story right after this break. Don't go away. Welcome back. You're watching Inside India, and here are some of the stories we're keeping tabs on. U.S. officials are defending the fatal shooting of a U.S. citizen by immigration agents in Minneapolis, even as video appears to contradict their claims. The Trump administration says 37-year-old Alex Pretty assaulted officers, but bystander footage shows him holding a cell phone before he was shot at close range. It is the second such killing in Minneapolis this month, sparking protests and renewed calls from state leaders for federal agents to withdraw. President Trump, meanwhile, telling the Wall Street Journal that he expects to pull back forces from the city, though he did not provide a timeline. Staying in the United States, over 1 million customers are without power and more than 10,000 flights canceled as a massive winter storm sweeps through the states. Snow and sleet are battering the eastern two-thirds of the country, prompting 17 states to declare weather emergencies over the weekend. And New York City Mayor Zohran Mamdani took closing schools and opening warming centers in the city. The weather disruptions are reportedly expected to continue into Monday. Snowstorms, that is, have also made it to northern India as well, breaking the driest January in 4 years. Popular tourist destinations Jammu in Kashmir, along with Shimla and Manali in Himachal Pradesh, have been blanketed in snow, causing overjoyed onlookers, but have strained local infrastructure, leaving blocked roads, grid disruptions, and hundreds of people and vehicles stranded. The Indian Meteorological Department projects that New Delhi and neighboring states could also see chilly conditions and isolated rains. Natural gas prices have nearly doubled in the last week as cold weather spurs a surge in demand for fuel to stay warm, weighing on supply and putting pressure on power supply grids. NYMEX futures are up another 15% this morning. You can see it there. Nat gas futures there jumping more than 15% to about $6.10. Spot gold continues to climb as well. The precious metal now breaking past $5,000 a troy ounce for the first time. Remember, it started the year below 4,300, so it surged about 16% in year to date. Right now, trading about $5,076 per troy ounce. Seems that there's still room to run for the precious metal as the appetite for safe haven does not seem to abate in global markets. Despite these higher prices, buyers in India remain undaunted. Gold and silver premiums in India have surged to their highest levels in over a decade. This amid concerns that the upcoming budget could introduce higher import duties on the precious metals. The surge in gold also coming as we wait for the Federal Reserve decision due on Wednesday. We're not expecting any changes in policy after it already lowered rates by 75 basis points over the last 3 meetings. But we will be watching Chairman Jerome Powell's post-meeting press conference, which will be his first since he announced that the Trump administration has launched a criminal probe about a Senate testimony he gave last year. Global central bankers and financial leaders have called it Trump's attempt to bring the Fed to heel, an attack on Fed independence. Trump has been looking to replace Powell with someone who would be faster at easing policy, and he's expected to announce his candidate this week. We're also tracking the Japanese yen after a sudden spike in the currency over the weekend, its biggest gain in about 6 months. The Japanese yen has been sliding towards 160 against the dollar, unmoved by the Bank of Japan's decision on Friday, where the central bank left rates unchanged as widely expected. It has strengthened, though, to around 154 against the greenback after a so-called rate check by the New York Federal Reserve, which traders say usually comes before a market intervention. On Sunday, Prime Minister Sanai Takaichi also confirmed that Tokyo is ready to take necessary action against speculative market moves. Takaichi's expansionary fiscal policies have had global markets on high alert, especially after a bond market rout last week which sent yields surging. She says that Japan can secure enough funds for her policies without issuing more debt. Indian markets are closed today, but let's take a quick look at the local currency, the Indian rupee, which is continuing to look flat to the strong side now, at 91.62 against the U.S. dollar. Of course, just treading cautiously as we wait the upcoming budget announcement early next week, and the Indian rupee looking a bit cautious today, but slightly firmer against the greenback so far. Meantime, President Trump is also threatening Canada with 100% tariffs over its trade deal with China. Our China reporter, Elaine Yu, has more of the details. Elaine, tell us the latest on what you know about this and the possible implications this might actually have.
Right, JP. So Trump issued his threat on social media, warning the Prime Minister, Mark Carney, against turning Canada into a drop-off port for China to send products into the U.S., saying that China will eat Canada alive. And he went on to threaten 100% tariffs against all Canadian goods coming into the U.S. And you'll see in that post that he also insulted Mark Carney, calling him governor, which is something that he's done to his predecessor, Justin Trudeau, as well. Now, this is after Carney reached a trade or tariff truce with China during his visit to the country earlier this month, where from March 1st, Canada will allow a number of Chinese EVs at a 6% tariff, down from 100%. And in return, China will remove 100% tariffs on Canadian canola meal and also drastically reducing tariffs on canola seeds. Now, this year is the crucial one, as it is the U.S.-Mexico-Canada agreement that's up for review. And there are terms in that agreement about free trade deals with non-market countries, which clearly are focused on China. But Mark Carney has said now that he has no intention to pursue a free trade deal with China or any non-market economies, saying what we've done with China is to rectify some issues developing in the last couple of years. Now, the Canadian Chamber of Commerce also said that a structured and stable relationship with China and others are not to replace a deeply rooted relationship with the U.S., which they say is overwhelmingly good for North America. Of course, it's important to recall Carney's Davos speech provocative one where he said the world's middle powers need to act together to resist coercion from the world's largest powers. But it's also worth noting how just earlier in January, Trump actually supported Carney on a China deal, saying that that's what he should be doing and that's a good thing. So it's hard to say if this is going to be a case of taco as well. JP?
Yes, there's that term from 2025, taco, and let's see if that does happen. Elaine, you very important details there. Thank you so much for that. Turning to the crypto patch, Bitcoin still below the $90,000 level, and you can see here Bitcoin for about 87,158 right now, down about 2.3% intraday. Binance founder Changpeng Zhao sat down with CNBC's Andrew Ross Sorkin in a wide-ranging interview over at the World Economic Forum in Davos. CNBC asked CZ where he thinks his Bitcoin is heading this year. Here's what he had to say about that.
So whenever people ask that question, I always got to ask them, what's the time frame you're looking at? If you're looking at today, tomorrow, on a daily basis, there's no way I can predict. If you look at a 5-10-year horizon, it's very easy to predict. We're going to go up. If you look at a 1-year horizon, which is like what the most sort of common framework is, 2026, I'm not sure. You may be. I think I have very strong feelings that it will probably be a super cycle.
Be a super cycle.
2026, yeah.
For Bitcoin.
For Bitcoin.
And what super cycle to you means what?
Well, normally Bitcoin follows 4-year cycles historically. If you look at historic data, like every 4 years, there's a all-time high and then there's a drop. But I think this year, given the U.S. being so pro-crypto and every other country is kind of following, I do think we will see this. We will probably break the 4-year cycle. Yeah.
We got to go, but just on a personal level,
sure.
If you could redo anything, given all that's happened in your life now and all the wildness of the last couple of years, what would have you done differently?
Oh, I would have blocked U.S. users from day one.
That's the answer?
That's the day one.
Well, what about some of the regulations and trying to abide by those regulations?
Well, that's the main thing. That's the main thing about the regulations. It's like at the beginning when we started the tech platform, we had U.S. users, and I was based in Shanghai back then. We're like a small technology startup, right? So, but it was like 6 years later we found out, oh well, that is a violation of a Banking Secrecy Act.
Right.
If I'd known that, and now I know that, if I start over again, I just like block U.S. users from day one. And then I will have much less trouble.
Zhao also spoke about U.S. President Trump's pardon, clarifying that he has, quote, no business relationships whatsoever with the Trump family, and that until now he's still unsure about the pardon process. Take a listen.
I still don't know what the process is. So my understanding is, you have a lawyer that submits a petition.
Right. But when did you even think to yourself there was even a possibility that you could try to seek a pardon?
Interestingly, so it was around March 2005 that it was actually all the media that says I might be trying to get a pardon. If all the media, like Wall Street Journal, Bloomberg, New York Times, are saying that I should be getting a pardon, then
this was before you were even thinking about getting a pardon.
Well, the pardon topic came up even before that, but I didn't apply, right? So I got out in October 2024.
Right.
So all the way up until March 2025, Trump was elected in November, and then he got into office in January. I didn't apply, and then I think it was in March. There was quite a lot of articles associating Trump, me, crypto, even some Abu Dhabi stuff. I was like, maybe I should apply. So I asked my lawyers to submit a petition, and then it's like a black box. I don't know what the process is. I still don't.
But I imagine everybody thinks that there's got to be maneuvering around the edges, people trying to whisper to certain people to try to get in front of the president, maybe to get through his family or, Eric Trump or some of his sons and other things.
Not that I know of. I think there's a lot of people giving me a lot of suggestions, but I don't think any of the suggestions have actually worked. The people suggest the most is get in front of Trump yourself.
Right.
If Trump sees you, President Trump is like a guy that goes by his intuition, but I never got in front of Trump, so I just waited, and then suddenly it happened. Yeah.
Have you had the chance to talk to him?
No, not yet. The closest I got to him was today when he was doing the Board of Peace session. I was in the audience. I was about 30, 40 feet away from him. Never talked to him. Never shook hands. Never. But now I've met him kind of in person, but
right.
A stage audience type of relationship.
Would you like to say something to him if you could?
I want to express my appreciation to him. Obviously, yeah, I would love to. Yeah, I'm super appreciative of the pardon I got.
Right.
Yeah.
As you know, there's been a lot of questions about the pardon and the connection between Binance and the Trumps and what that looks like. Can you speak to that?
Based on my knowledge, there's really no connection. I mean, I think the only thing is, look, the Trump families are in crypto.
Right.
Binance is a large crypto player, and the President Trump's administration is pro-crypto, and that helps all the businesses in crypto. That's just good for the crypto industry and good for America as well.
And before we go, let's take one final check again on Asian markets. As the morning session in most of countries comes to an end, you can see here the Nikkei 225 continuing to pull back and on the back foot, on the back of that stronger yen. The Hang Seng, though, in Hong Kong, China is starting a bit of a recovery now after starting the day in the red. They're up by about 0.1%, matching that of the Shanghai Composite out in mainland China. The South Korean Kospi in the red by about 0.7%. Keep in mind that Australian markets are offline today, and so is India. And happy Republic Day to India, of course. That's all the time we have today on Inside India, and happy Republic Day, as we mentioned, to all Indians watching. And do keep watching CNBC because Access Middle East is coming up next. Have a good morning.